With economists projecting inflation and interest rates to stabilize and overall monetary policies to steady, there are several reasons for industry leaders to be optimistic in 2024, suggests Emily Mansfield, Regional Director for Europe for the Economist Intelligence Unit, EIU. She joins host Frank Vitagliano for a dialogue on consumer and business demand and the critical factors impacting both communities in the latest installment of Beyond Distribution with GTDC. Emily also provides her thoughts on the monetary and political policies which could impact the industry. Listen to this episode of Beyond Distribution with GTDC for all those answers and more. Visit the GTDC Knowledge Hub for access to additional podcasts, episodes, and other valued industry resources. Thank you for listening.
Welcome, everybody. This is our, I think, almost our 40th edition or close to it of Beyond Distribution podcast. And today I'm delighted to have with me Emily Mansfield, who is the Regional Director in Europe at the Economic Intelligence Unit. And Emily will be joining our GTDC event in Amsterdam in June as a keynote speaker. And we thought it would be great to have her in advance to talk a little bit about what she's seeing in the world these days. So Emily, welcome.
Thank you very much. It's a pleasure to join you.
Yeah. So before we get started, Emily, on all the, the questions and your observations on the market and all of that, the marketplace and the economy, tell us a little bit about yourself and maybe a little bit about EIU and, what you do there.
Absolutely. Yeah. So I'm the Regional Director for Europe at the Economist Intelligence Unit. We're the sister company of the Economist magazine, which you might well be familiar with.
Yep.
And we're really the sort of B2B side of the business. So we're doing much more in-depth political and economic analysis and forecasting for a business audience across a whole bunch of different sectors. So I lead the Europe team. I've got perhaps a dozen analysts covering all of the economies, right from the UK across through to Russia and everywhere in between. We've also got lots of contributors who are on the ground in those countries. That's one of the things that sets us apart from some of our competitors, is we've actually got lots of professors and journalists and economists who are actually on the ground who can tell us what they're seeing and provide their insights. That's really helpful. It's great for us to be able to work with a big network of really well-informed people that help us put together forecasts that really spell out how we expect the world to develop both politically and economically.
Yeah, that's great. We've experienced some of that because, as you know, your team has helped us in both the APJ for a Singapore meeting that we had not long ago, and also in the Middle East. We had members from your team, and it was very, very interesting and informative. So you guys clearly have your hands on the pulse of what's going on. So, but before we get into some questions specifically, because there is certainly a lot going on, you've decided to pursue a career as an economist. How did that happen? What kind of got you into it? Were you interested in it from early days, or did you just kind of happen to decide later on, as you were trying to figure out where you wanted to end up, what you wanted to end up doing? How'd that happen?
Yeah, so I guess I didn't really intend originally to become an economist. And I actually studied English literature and then American literature at university. I then started my career as working in editorial in magazines. I was looking at the travel sector to begin with. Then I started moving in towards current affairs. And I quickly realized that what I really needed then, in order to really connect the dots of what's happening in the world and be able to explain that to readers, was a better understanding of economics. And so I studied economics, did my second degree in economics, and that enabled me then to become an analyst. I was an analyst for several years at the Economist Intelligence Unit, covering a number of different countries across sort of Central Europe and Western Europe. I speak French. I used to live in Paris as well. So I've got lots of interest from the personal side as well as the professional side in what's happening in Europe.
Yeah.
And worked my way up. I became principal economist and then regional director. So I'm now leading the team. But it's a really great place to work, partly because EIU really likes to look not just at economics in isolation, but always at politics and the interplay between politics, policy, and the economy. And I think you can't really look at any of those things separately because they all interrelate, and it's important to look at the big picture.
I mean, I can't even, you are so spot on. I mean, every day here in North America, for sure, where I live, that's all anybody wants to talk about. It's all anybody wants to talk about, and it's so intertwined. And of course, there's a lot happening, which couple of things we'll talk about here in coming up. But that's really good. What's your favorite part of the job?
Ooh, great question. I guess one thing I really enjoy is being able to kind of connect the dots for clients, talking to clients, hearing their perspective, and being able to share how we see things, linking up things that clients may have read about in the news or heard about on the TV, and being able to explain how that fits into the bigger picture and how that might be relevant for their businesses or for some of the challenges that they're facing in the years ahead. Being able to sort of think one step ahead. What does this mean? Why is this happening? And what's going to happen next? I find that really fascinating. It means it's always
and helpful too, because the average individual who doesn't study macroeconomics or economics but lives in the world needs somebody to do that. Really needs somebody to do that. So that's great. So obviously today we're just going to kind of talk about some things kind of in general, because I don't want to obviously steal your presentation for all the people who are going to attend our event. But let's start with the global economy a little bit. There's so much going on. I don't even know where to start. But what are some of the positive indicators that you're starting to see for as 2024 unfolds here a little bit?
So there are definitely some optimistic things that we can point to as we look ahead. The biggest of those is around this whole story around inflation and monetary policy. So, of course, we've just come out of a period of time where we've had big spikes in energy prices after Russia invaded Ukraine. That really drove up inflation. We saw monetary policy tighten in the wake of that. So now we've got very high interest rates. Making it a lot harder on everyone's pockets, I think, for homeowners servicing mortgages, for companies wanting to make investments. Borrowing costs are very high. So things are a bit tricky at the moment from that perspective. But what we are seeing is a bit more of an optimistic outlook as inflation comes back down. We are expecting to see interest rates in Europe from June and in the US from a little bit later, maybe around September.
Yeah.
Of course, the reason that the US is probably going to start cutting rates a bit later is because the US economy is the other big positive at the moment in the world. Its economy is still going gung-ho, really. It's much stronger than anyone really anticipated, given the fact that interest rates are very high and the rest of the global economy is not exactly expanding at a rate of knots at the moment. So really strong US economy and a positive outlook in terms of inflation coming back down. That's going to give consumers a bit more purchasing power. Interest rates coming back down. That's going to help companies make a bit more investment. And I guess what we're also seeing, if we look further to the east, Chinese economy, it's not growing as rapidly as it could, but it has nonetheless stabilized. We have seen enough sort of fiscal support, policy support, that the Chinese economy is growing at least a fairly stable rate. And in actual fact, there's some really strong growth rates elsewhere in Asia. So we're expecting 60% of global growth this year to come from Asian economies. So there's lots of really strong dynamics going on around there at the moment.
That's good. So, okay, so I feel good now. So now let me ask you, what are the things that I should be concerned about? Or maybe not as positive that, are sort of out there that that you would indicate might be some inhibitors to what we're seeing.
So I think the corollary of we've got some interest rate cuts coming is we're not 100% sure of when they're going to come. Yeah. There is still a bit of uncertainty there, and uncertainty always weighs on business decisions, on business investments, even on households as well. So we are still waiting for that moment to come when those borrowing costs start to come down, because for the moment they are still very high.
Yeah, and the U.S. Fed says they're waiting for it to be 2% on a 2% rate, which it's stubbornly not getting to 2%. It's settled in around 3.5. And so if they stick to that, who knows, right?
Exactly. So definitely a fair amount of uncertainty here. And as you say, particularly in the US, with that economy just like failing to slow down as you would expect it to. So the risk that we do end up in what we would call a higher for longer scenario, where interest rates stay high for longer, and that keeps economic growth a bit lower for longer, that is still a risk that we need to be aware of. So that's the number one concern. And there's a couple risks that could trigger that scenario. One thing that we are keeping a close eye on is food prices. Now, we're coming out of the El Nino period, which has produced some very volatile weather patterns in different parts of the world that suppressed crop yields and pushed up food prices. But there is a pretty high chance now that we're going to move into a La Nina situation. And this also has a volatile and unpredictable impact on crop yields and therefore food prices. So if we were to see a bit of a commodity price spike, that could obviously push up inflation. The other risk when it comes to commodities and therefore inflation is what's happening in the Middle East. If we were to see more of a sort of regional escalation of what's happening, we could prices start to pick up. And that obviously has a big impact, particularly on Europe. That could really push inflation back up as well and push out those interest rate cuts a bit further.
Yeah, that's really interesting. You mentioned the food prices. I will tell you that, in the U.S., as you mentioned, the economy's strong, jobs are still hanging in there. It all seems like it's getting better, except when you look at one thing. When you look at a market basket, and that market basket of goods, mostly food. I don't even think gas is in here. But when you look at food over like a 3 or 4 year period, the last one I looked at the prices were up 25-30%. And the average individual feels that every day, right? Everybody feels it, but for some people, they feel it more. And that has been persistent for a while. And it has a lot of people I know in the United States very frustrated because the headlines are economy's getting better, we're staying strong, but yet people are paying significantly more, at the grocery stores than they had in the past, and that's frustrating. And now you've explained some of it, perhaps why it's happening, but that would be a big concern if that continued. It really would.
Yeah, and I think what's interesting is that we can say, prices are coming down, but often they're coming down from a very elevated rate. So they may have risen by 60%, and sure, they've come down by 10%, but that's still a lot higher than it used to be. So and of course, whether low income consumers or lower income countries, you tend to be spending a larger proportion of your disposable income on food. So when those prices are high, it really, really hits you in the pocketbook.
Exactly. And wages, while they are getting better, aren't increasing at the same rate. It would almost be impossible for some of these low-paying jobs for them to increase it enough to keep pace, right? So, that's good. So, okay. Now I've got, one of the questions that I'm really interested in is, 2024, as you know, is a big election year in the United States. And oh my God, there's just so many thoughts around that, and you can't find anybody, in the United States that isn't a little uneasy over, frankly, what's happening. And so, what's your high level view of that?
So yeah, I guess if we're talking about things that we should be a little bit concerned about regarding 2024, uncertainty about what will happen in the US election is really up there as well. There is a huge amount of uncertainty because, quite honestly, this election is balanced on a knife edge, and it's really going to come down to things like turnout and things like, can either of the candidates really expand their core voter base very much? Both of them face challenges in doing that. So it's a very close call. We do have a forecast, and that forecast is that by the time we reach November, the economy will be looking stronger, and that will work to the benefit of Biden rather than Trump. But it is incredibly close. And what we've been advising all of our clients to do right now is contingency planning. You need to be prepared for either outcome.
Yeah.
That's
No.
just really the only way to put it.
Yeah, it makes sense. I don't know if you heard this, you probably have, but they announced just a couple of days ago that there's going to be 2 debates coming up. And they're going to be the 2 of the earliest debates in history. In fact, the second one will still be 2 to 3 months before there's ever been a presidential debate. There's going to be one in June and one in September, and they've never been that early. So it's going to start to get really interesting soon here.
Absolutely.
Yeah.
Absolutely. And obviously, when we think about the global economy, there are a lot of things to be concerned about from an economic perspective, given some of the policies that Trump has suggested he might implement. The key ones that we would want to keep a very close eye on are the tariffs that he's proposed. So 10% blanket import tariff across all of America's competitors and allies as well. That would be very difficult. It would be very inflationary. It would be really tough for supply chains and for European economies in particular. If Chinese goods were subject to 60% tariffs, that would be even more disruptive for the global economy. So yeah, this is, and also inflationary for the US economy, and that could also have quite a big impact on what happens in terms of interest rate cuts and in terms of the growth outlook for the US too.
Yeah. So as they say, elections matter. I guess they do.
They do. They certainly do.
That's interesting. So you spoke briefly of China. One of the things that we're doing at GTDC is we're expanding our coverage into APJ really for the first time. So we've hired a resource there. We already have many of our members have locations there and do business in APJ, but we had never really, had a real presence there. But we're going to now, and we're right in the midst of starting it. So what do you see for the factors in that region in particular, and in Asia Pacific?
So this is a really exciting region, to be honest. And I was actually out presenting in Hong Kong and Singapore just recently. There's so much economic dynamism and so much that's happening, so many supply chains that are shifting and new business opportunities opening up. It's quite an exciting region right now. The key stories, I guess, the Chinese economy, it's not as strong as it could be, but it has stabilized. So yes, maybe 5% growth is the new normal for now, and that is going to slow because we do have a demographic profile that is not quite as optimistic as it could be. So we're expecting Chinese growth to be slowing gradually towards the sort of 3% growth mark by about 2030. But China is still a hegemonic power, and it is going to account for the lion's share of economic growth in the region nonetheless. We've also got Japan returning to growth and inflation beginning to normalize its monetary policy. So there's some shifts happening there too. And India is going to be the fastest growing global economy in the world over the next 5 years. So lots of excitement around India, lots of investor interest. I would just temper that by saying, of course, the Indian economy is less than a quarter of the size of the Chinese economy. So what happens in China is still really, really matters. But lots of excitement around India at the moment. And India and Southeast Asia are really competing at the moment for a lot of what's being termed China Plus One investments. There's a lot of firms who are operating in China and are concerned about US-China trade tensions as a business risk. So often this is Western firms that decide, they're not going to divest from China. They still want to operate in China, but they do also want to have maybe a backup supplier elsewhere in the region. So they're keeping one supply chain in China. They're also operating another one elsewhere. So instead of just in time, we could think about that as just in case. It's a bit more expensive, but it's more resilient. And we're seeing a number of economies across Southeast Asia and India in particular that are really benefiting from that. they're kind of competing for investment, I would say, at the moment. And interestingly, it's not just investment from Western companies. There's lots of Chinese companies as well that are really concerned about what might be coming down the pipeline in terms of US tariffs, sanctions. So they want to make sure that they're hedged against that as well. So lots of digital investment in particular happening places like Indonesia, Malaysia, Vietnam. We've got data centers and startups and all sorts of some quite exciting electronics investment happening in that region. So yeah, China plus one, it's a big deal.
Yeah, that's good. That's a good term. I had not heard that term before. So now I know what that means. So thank you. That was helpful. So just a couple more quick questions. As we kind of wind down a little bit, but one of the things that I think about a lot, and I mean, God, not to downplay the human suffering and caused by the ongoing conflicts, but so the Ukraine-Russia war has been going on for a while now, obviously. Now we've got the Middle East conflict, and I don't know, you just kind of get the feeling, obviously, those of us in the US aren't close to it on a day-to-day basis, but it's just still kind of out there, and it's significant. But what's happening in terms of the impacts, like within Europe and maybe even the rest of the world, that you see from an economic standpoint? We totally understand the human suffering, et cetera, and that's horrible. But from an economic standpoint, it seems to be just Europe seems to be just doing okay despite what's going on. What are your thoughts there?
I think that's a good summary, actually. It's almost as if the impact is less than anticipated. The impact from the Russia-Ukraine war has sort of worked its way through the system. And the biggest shift for Europe was in terms of where it's buying gas from. So LNG is now being bought from the US, from Norway, from Algeria, Azerbaijan, all sorts of places, Qatar. And really, Europe has pivoted away from reliance on Russia. So that's a big shift, but that's pretty much happened now. So things have stabilized. The conflict in the Middle East was also a big concern, in large part because of the Houthi attacks in the Red Sea, which has very much disrupted shipping, particularly going up through the Suez Canal. But interestingly, we have seen a rise in freight costs, but they've kind of stabilized. And supply chain disruptions haven't been that significant. So what we're actually seeing is unless there is a really major escalation across the Middle East region of this conflict, which isn't our core scenario, we'll probably see that disruption remain at the level that it's at right now. So maybe you need to factor in some slightly longer lead times for electronics that you're bringing in from Asia. Lots of ships having to go round the south of Africa instead of going through the Suez Canal, but that's been pretty much factored in now, I think, by businesses. So actually, from an economic perspective, I think things have more or less stabilized with a few notable exceptions, I guess. From a global security perspective, I think what's happening in Ukraine is still very much a live issue, because the question of whether or not the US will continue to support Ukraine it's a very live issue. It's a big concern for Ukraine. And I think the fact that all of the Western powers had said, we will back you when Russia initially invaded, means that if they actually back down from that, their credibility and their security guarantees risk being very substantially undermined. And that is very concerning for other countries, maybe like the Baltics or Moldova or Taiwan, that might consider themselves exposed to other kind of revisionist goals.
Yeah, that's an excellent summary. That is, and there's a lot to it, but the worst thing that can happen, unfortunately, is we just kind of take it for granted and kind of know it's there because, as I said, of the human suffering. But it just seems like, we've been able to, the economy's been able to just, continue doing what they do, So one last question I have for you, and I'm going to start it with a little bit of information and sort of an observation. But one of the things that in the IT space that everybody's talking about is the advent of AI. And as AI, continues to evolve, and it's clearly evolving, right? Very quickly in some cases. it'll have very significant impacts. It'll have subtle impacts relative to, sort of the human piece of it, right? How do you manage it? How do you control it? How do you make sure it does good versus bad, right? Net it out. But getting down to the world that I live in, one of the things that people are talking about are things like AI powered PCs, which are going to, make a big difference going forward. And that'll help with the turnaround that we're starting to see in the IT space, because last year was kind of a soft, market, particularly in endpoint devices, PCs, laptops, printers, because of some supply chain overages coming into the year, and abating demand. It was a slow year. But are you factoring in, as you look at what's going on in the world, do you think about AI? You think about the potential implications of AI? What do you think about there?
Yes, absolutely. I think everyone is thinking about AI right now, and I think we're coming into a period of time where we're going to move from experimentation with AI to implementation, and AI use cases are going to have to start to really show that they can offer a return on investment and that they're really practicable. And as you said, there's going to be a lot more demand for those AI enabled features, whether that's within software or within PCs, laptops themselves. Right. And I guess the broader point I would make there is that we've discussed the kind of big macroeconomic context. And yes, we are moving into a phase, hopefully later this year, where we're going to have interest rates coming down, inflation coming down, growth picking up, and then maybe growth stabilizing at a stronger growth rate next year. But I think probably what is more important, particularly in the hardware space, is the fact that we're coming up towards this big phase of renewal in devices, because lots and lots of companies bought laptops for their workforces when we all had to go mobile during the pandemic. And if those devices typically have a 3 to 5 year lifespan, then we are looking at replacement happening this year or next at the latest. So that kind of global electronic cycle is just turning. And that uptick is going to be, I would say, probably very significant for your industry. It's kind of coinciding as well with this growing demand, as you say, for AI-enabled possibilities. Interestingly, actually, I spoke to someone at the Economist group to see how we're handling that. And he said that in actual fact, in practice at the moment, it's a bit of a headache, because everyone is really keen to implement AI, but we're still having to do a back and forth with the legal department, making sure that all of our data and the exposure of our data is in line with where it needs to be in terms of evolving regulation. Actually, that's adding some overhead, both for the IT team and for the legal team. So we're kind of not quite there yet, but there is a lot that will be happening, that will be changing in the next couple of years. Yeah,
that's interesting. The promise is there. The one thing I will say, and I think this is in general a statement of, the economy's been extraordinarily resilient, as you mentioned. I think productivity is one of the reasons for that. In other words, I think there have been productivity gains that have happened. A lot of it came out of the pandemic. And I know in my industry, the fact that you and I are doing this now on a medium that enables us to have, thousands of people listening all over the world, like we were, in the same room, is incredible. And it's those kinds of productivity gains that I think have helped some of the numbers. And I think that, because some of it you'd say, with anything that's going on, things really shouldn't be as good as they seem to be. And I think we've only begun to scratch the surface of the productivity gains that we'll ultimately see from AI after we get through this phase of sorting it out, figuring out. Does that make sense to you?
Yeah, absolutely. Absolutely. And I think what's going to be really interesting is that as AI starts to get really implemented across workforces to a greater degree, we're going to see a little bit of a shift, such that some tasks will get automated, other tasks will be new tasks that will need different people with different skills to be able to carry out. So there's going to be an evolving demand for different skills within the workforce. I think some years ago, I know there was a lot of concern about whether AI was going to come and take all our jobs. I think now it's a bit more of a nuanced discussion that's happening around, well, yes, some things will get automated, but we're going to need people to do other things. And what are those things? And how do we make sure that that happens in a smooth and effective way, so that maybe, you know, we can make our coding a lot more efficient, and we can improve our marketing offering. But we're not just going to be getting rid of people. We're going to be shifting people, hopefully, into higher value added areas, which, as you say, improve productivity overall.
Yeah, excellent. Well, Emily, this was great. I really appreciate you spending some time with us in advance of our upcoming event. We are thrilled to have you keynoting at the GTDC EMEA event in Amsterdam on June 5th. So we're thrilled with that. I'm looking forward to meeting you in person, and I just want to thank you for your time.
Absolutely. Likewise. Looking forward to meeting you, and really looking forward to the speech.